Hello fellow traders, this is my first Forex video analysis and I will dive right into it. So what I will be analyzing on this chart is a potential trade I'm looking to take on the US dollar with the Canadian dollar on the weekly time frame. I will not be zooming into smaller time frames, I will be taking the signal right off the weekly time frame. So first let's have a look at this chart. Price made a massive move to the downside. It bottomed out at around this level, then it formed a channel, an uprising channel. It topped out at around this level, came back down, tried to go up again, but it couldn't even take the previous high, and effectively giving us the first warning signal that the trend is over, and then it effectively broke the channel. Now, the reason why I have already all of this is drawn is because I'm having troubles with my mouse, and it would just take a lot of time for me to draw everything all over again. So let's continue. If we zoom in just a little bit, we can see that the breakout happened in momentum, and make sure that you always, every time you're looking at to trade a breakout, that it happens in momentum. With the momentum is signified by these two big red candles. All right. And this is another good indicator that the trend is over and the bears are taking control of this market. Once the breakout happened, price bottomed out at this level here. It tried to go back up again, and last week it gave us this pin bar. Now, pin bar is probably one of the most, if not the biggest indicator that a bounce is about to happen, or a reversal. Why is that so? Well, it's because of the nature of the pin bar itself. It has a long wick, in this case to the upside, a small wick to the downside. That means that as these three candles here, price tried to go up, and the moment it touched the lower boundary of the channel, previous support now turned into resistance, it immediately went back down. It went back down because of multiple factors. First thing is this channel boundary here. Second, we have this level right here that is in purple color, which was also, it's some sort of a multiple bottoms. We have here 1, 2, 3, 4, 5 times. Price tried to break this level, it couldn't, and then it effectively broke it. So we have a double level of previous support now turned into resistance here. And also we have a Fibonacci level almost to the pip at 61.8. And so we have three different elements of confluence of resistance that's forming at around this level. That's why my bias is towards the downside. I'm not looking at any fundamentals because I don't believe fundamentals can affect this trade. Even if there's a spike in price, it'll be, 30, 40, 50 pips maybe, and my stop loss is going to be bigger than that. So and by the way, regarding the Fibonacci, I only take into consideration bounces that retrace in the area of 61.8 and 38.2. Anywhere at around this area is a valid level. So let me just clean up the chart for a second. I'm just going to remove the channel also, and I will leave this level here. So I will explain to you why just now. So how will I personally enter into this trade? Well, I'm going to set a pending sell stop order 5 pips below the lowest point of the pin bar. Why? Because once Monday's candle opens, and if price goes below that level, that means that definitely the breakout pullback continuation formation is happening, and it's happening in momentum. I don't want to just click on the sell button once the candle opens. I don't have any confirmation whether this is going to happen or not, but once price takes out the previous week's low, that is basically it's a conservative approach that I'm having towards my entry signal. Now, the stop loss is located just a few pips above this level here, which is almost, if you take the entire candle and measure the 50% line, it's just above the 50% line of this entire pin bar here. So there are a few ways you, could enter this trade. You could be aggressive and just click on the sell button once the Monday's candle opens, and also put the stop loss here. Or you could put the stop loss 5 pips above the highest point of this pin bar. Or what I'm doing is basically a mixed approach. I'm having an aggressive stop loss, because a lot of I know traders that they want a wider stop loss. I personally don't do that, but I respect every trader out there. And I have a conservative approach to entering, just because I want a confirmation of whether my bias is correct or not. So as far as exiting policy goes, I will exit 50% of my lot size once the first reaction candle closes, and another 50% on the second reaction candle. This move is supposed to, happen in momentum, so it should be rather profitable. We'll see. We never know what the markets are going to do. What we are doing right now is reacting to what is currently happening. I'm not trying to predict or anything. Predicting is impossible. This is just a reaction of what is currently happening on the charts right now. Let me just remove this, and all right. Yeah, so that's it. If you have any questions, feel free to write me in the comments below, and I will keep you updated on how this trade develops. Bye bye for now.